While First Republic Bank's latest move makes a lot of sense given the current climate around banks and their stocks, but what will it mean for the floundering stock's value? Hi again, everyone. I hope you're all doing really well. So, the recent announcement by First Republic Bank, ticker symbol FRC, that it will not pay dividends on its common stock has been backed up by a further announcement that they are going to actually suspend them on their preferred stock also. This decision has come as a surprise to many investors and analysts and has raised several questions about the bank's financial position and future prospects. So, why has First Republic Bank decided to suspend dividend payments? The answer lies in the bank's efforts to retain cash in order to strengthen its financial position and weather potential financial shocks. As you may know, the bank has recently been caught up in the widening crisis triggered by the collapse of two mid-sized US lenders and the subsequent collapse of Silicon Valley Bank. So this move is obviously one to help prevent further runs on their cash reserves by depositors. So to address the crisis, large US banks have injected $30 billion in deposits into First Republic Bank to rescue the lender. However, the bank still needs to be cautious and prudent in its approach to managing its finances in order to ensure its long-term stability and growth. One way to do this is by retaining cash rather than paying dividends on its preferred and common stock. By doing so, the bank can ensure that it has sufficient resources to fund its operations, make strategic investments, and respond to any potential financial shocks that may arise in the future. Of course, this decision has implications for investors who hold First Republic Bank stock. Many investors, particularly those who rely on dividends for income, may be disappointed by the bank's decision not to pay dividends. This could lead to a decrease in demand for the bank stock, which in turn could lead to a decrease in the stock price. However, it's important to remember that the decision to not pay dividends is ultimately aimed at protecting the bank's long-term financial health and growth prospects. So while investors may be disappointed in the short term, they may ultimately benefit from a stronger and more stable bank in the long term. However, time will tell. That being said, it's important to note that there are risks associated with retaining cash. One risk is that the bank may not be able to generate sufficient returns on its cash holdings, which could lead to lower profits and a decrease in the stock price. Additionally, the bank may face pressure from investors to use cash to pay dividends or engage in other activities that may not be in the best interest of the bank's long-term financial health. Furthermore, by making this decision, it might signal further weakness by the bank to the general public and might lead to more depositors getting worried and removing money from the accounts, which is a bit of a problem that we will have to watch the markets for next week around. It is also worth highlighting the fact that holding onto the cash actually improves the underlying value of FRC stock on paper, as it adds to the cash asset and retained earnings columns on the balance sheet, for those of you who love a bit of accounting. But I suppose the reality at the moment is that the stock is currently not being priced necessarily based on the values of their balance sheet, so the value investing argument is perhaps not a strong one for this stock. In conclusion, the decision by First Republic Bank to suspend dividend payments on its preferred and common stock is aimed at retaining cash to strengthen the bank's financial position and weather potential financial shocks. While the decision may have implications for the bank's stock price in the short term, it is ultimately aimed at ensuring the bank's long-term stability and growth prospects. Investors should carefully consider these factors when evaluating the bank's stock and should be prepared to accept short-term volatility in exchange for the potential long-term benefits of a stronger and more stable bank, hopefully. Anyway, what is your read on the whole situation? Do you think this is going to spell bad news for the stock price and see a continued tumble for FRC stock? Or do you think it is a prudent move and the market will reward shareholders accordingly by boosting the stock price? I suppose we won't know until Monday, but let me know your thoughts in the comments below. Until next time, everyone, may the markets trade in your favor. Cheers.